Some people grind for years only to stall when they're closer than ever. This isn't because they stop earning. It's not because the market turns. It's a psychological shift they never see coming. My name is Ben, and I spend way too much time analyzing why some people build wealth while others never break free. Today, we're diving into a concept I call the illusion of arrival, and I guarantee some of what I'm about to tell you will change how you think about money. Here's what nobody talks about. Saving $10,000 changes everything. Not because it's a magic number, not because it's a fortune, but because it flips a switch in your brain. You see that $10,000 and suddenly you're not just surviving, you're not panicking over every expense. For the first time, you see a buffer, a safety net, a little financial breathing room. It's tempting to think you've arrived. But here's where it gets dangerous. Think about it this way. When you hit the $10,000 mark, you might start feeling a little too comfortable. You might relax your discipline. You might even start spending more freely. Why not? You've worked hard, saved diligently, and now you deserve a little reward. But this is the exact moment where most people slip up. They fall into the illusion of arrival. They start making decisions as if they've already reached financial freedom. And that's a mistake. Let me show you why this matters. Imagine you save $10,000. And let's say, instead of continuing to save, you start spending just an extra $200 a month. It sounds small, right? But over a year, that's $2,400. In 5 years, that's $12,000. More than your initial savings gone. 5 years of saving, 5 years of discipline, 5 years of progress gone. That's the brutal truth. Affording to lose money and being able to afford losing money are two different things. Here's what's actually happening. You're not rich. You're not even close, but you're dangerous. Dangerous because you think you've made it when you're just beginning. Dangerous because your mindset shifts from saving to spending. This mindset shift is what keeps people trapped. It's why most people never break free. Most people don't realize that the $10,000 mark isn't the finish line. It's the starting line. And if you don't see it that way, you risk losing everything you've worked for. The key is to understand that the real journey begins now. Stay boring, stay disciplined. That's what builds wealth. And that's why most people never break free. The illusion of arrival is a trap. Recognize it, avoid it. Because true financial freedom isn't about a number, it's about a mindset. And if you forget that, you risk losing it all. I call this the complacency trap. It's the moment when your bank balance hits $10,000 and your mindset starts to shift. You begin to feel secure. But here's the thing about security. It's deceptive. It lulls you into a false sense of achievement. You think you've arrived, but in reality, the journey has just begun. Think about it this way. Saving that first $10,000 is like reaching the base camp of a mountain. You're proud. You've worked hard. But the peak is still miles away. And here's where it gets dangerous. Your brain tells you that you deserve a break, a little reward. Your focus shifts from growing your wealth to enjoying it. And this mindset shift is what derails most people. Let's look at a concrete example. Imagine your portfolio sees a sudden jump, a $5,000 increase in a single day. It's exhilarating. It feels like validation. Suddenly, your brain starts ticking off the possibilities, a vacation, a new gadget, maybe even a luxury watch. But the cruel irony is, indulging these temptations often leads to a slippery slope. One small splurge turns into a habit. Before you know it, your $10,000 safety net is whittled away to nothing. This is the exact moment where most people go off the rails. They start treating their savings like a cushion instead of a springboard. That's the real danger, because when you spend down to feel good, you lose sight of the bigger picture. You forget that the $10,000 isn't your destination. It's merely your starting point. People don't realize how quickly initial success can breed complacency. You take your eye off the ball. You assume that the same growth will continue effortlessly. But the brutal truth is, every dollar you spend on fleeting pleasures is a dollar that could have been compounding in investments. It's a dollar that could have worked for you rather than against you. Here's the insight you need. True financial freedom requires discipline, not just money. It requires understanding that a $10,000 balance is not a trophy. It's a tool. It's a means to an end, not the end itself. This is the trap nobody sees coming. The illusion of safety leads you to stagnation. The illusion of arrival keeps you from progressing. The key takeaway? Stay vigilant. Stay disciplined. Recognize that real wealth isn't just about numbers. It's about the mindset that grows those numbers. Avoid the complacency trap. Use your $10,000 as a stepping stone, not a stumbling block. Only then will you truly be on the path to financial independence. And that's why most people never break free, because they mistake a milestone for a destination. Don't let that be you. But wait, it gets worse. Another insidious threat lurks beneath the surface. I call this the overconfidence fallacy. Most people don't realize that saving $10,000 can inflate your self perception. Suddenly, you're not just someone with money in the bank. You're a financial wizard, an investing genius. You believe you've cracked the code. But here's where it gets dangerous. The Dunning-Kruger effect tells us that a little knowledge is a dangerous thing. It convinces us we know more than we actually do. Consider this. You've saved $10,000. You decide it's time to try your hand at stock picking. Why not? After all, you've been following tech trends. You put $5,000 into a hot new tech stock. It jumps 20% in a week. You're thrilled. You're smart. Then, just as quickly, it plummets by 30%. You're left with $3,500. That's a 30% loss in less than a month. And here's the brutal truth. It's not just the money you've lost. It's your confidence. It's your resolve to save and invest wisely. This is the exact moment where many abandon their financial plans. They start chasing losses, trying to outsmart the market. They forget the fundamental principles of diversification and risk management. The consequence? They lose more than just money. They lose time and momentum, years of saving wiped out by a single rash decision. Think about it this way. You're on a financial journey, not a financial sprint. The $10,000 isn't a green light to take unnecessary risks. It's a foundation to build upon. The overconfidence fallacy traps you into thinking you can shortcut the process. But real wealth takes time and patience. It demands humility and recognition of your limitations. Most people believe they can handle the market's ups and downs. They're wrong. When you're overconfident, you underestimate the dangers. You start believing in your infallibility. You take risks you shouldn't take. And when the market turns, as it inevitably will, you're left vulnerable. Here's what's actually happening. The more you succeed without understanding why, the more reckless you become. You mistake luck for skill. It's a vicious cycle that leads to greater and greater risks. And before you know it, that $10,000 is gone, vanished, along with your financial security. The key takeaway? Be wary of overconfidence. Recognize that success is not just about knowledge. It's about awareness of your own ignorance. Stay humble. Stay disciplined. Avoid the overconfidence fallacy. Use your financial knowledge as a tool, not a weapon, because the path to financial independence isn't paved with reckless decisions. It's built on steady, informed, and deliberate action. Stay cautious. Stay informed. That's how you truly build wealth. Most people believe wealth accumulation is a straightforward path. Save $10,000 and you're on your way. Simple, right? But here's the thing nobody talks about. Financial growth isn't linear, it's exponential. Let me show you some math that will change how you think. Imagine you save $10,000. It's a milestone. But what happens afterwards is crucial. Invest that $10,000 at a modest 7% annual return. In 10 years, it becomes nearly $20,000. Now, that's more than most people save in a lifetime. But here's where it gets interesting. The same $10,000 left for 30 years at that rate transforms into nearly $76,000. That's the miracle of compounding. But it only happens if you let your money grow undisturbed. Most people don't realize the power of this snowball effect. Think about it this way. You don't just save money, you secure a future stream of wealth. Every dollar saved today sets off a chain reaction. Today's savings become tomorrow's capital. It funds the opportunities you didn't even know you'd want. But most people don't understand this. They mistake short-term gains for real growth. They pull out their investments early. They disrupt the process. And this is where it gets dangerous. I call this the illusion of arrival. You think reaching $10,000 is the end? It feels like success. But it's just the beginning. The real power lies in patience and persistence, letting your money continue to work for you. When you stop prematurely, you cut off future growth. That $10,000 might seem significant, but the brutal truth is, It's nothing without the magic of time and compound interest. Let me give you a concrete example. Suppose you keep adding $100 every month to your investment. After 30 years, you'd have over $140,000 at a 7% return. That's the cost of a small house or a significant portion of your retirement. But if you interrupt this process even slightly by withdrawing early, those numbers shrink dramatically. The difference is staggering. It's the difference between financial independence and just getting by. The key takeaway: patience and discipline are your greatest allies in wealth building. Understand the exponential nature of investing. Recognize the value of time as your wealth multiplier, because the path to financial success isn't about hitting arbitrary targets. It's about unleashing the full potential of your money through patience and deliberate action. Most people never see this. They don't let time do its work. And that's why most never break free financially. So next time you reach a milestone, remember, it's only the beginning. Stay invested, stay patient, because the real growth is yet to come. And that's how you build true wealth. Here's what nobody talks about when you save that first $10,000. It's not just about the money, it's about freedom. You unlock a hidden power. Suddenly, you gain options. Most people think their savings are just digits in an account. They're wrong. It's leverage. You're no longer trapped the way you once were, beholden to a paycheck-to-paycheck cycle. This is what I call the illusion of scarcity. When you have nothing saved, every decision feels monumental. Every choice carries the weight of potential financial ruin. But with $10,000 in the bank, you shift from surviving to strategizing. Think about it this way. You can afford to take career risks that others can't. You're in a job that pays the bills but doesn't fuel your passion. Most people accept this as life's burden, but with a $10,000 cushion, you can explore other opportunities. Consider a new role with a 20% pay cut but greater growth potential. That $10,000 isn't just a safety net, it's a springboard. It allows you to make calculated decisions that focus on long-term gains rather than immediate financial security. The brutal truth is most people stay stuck because they can't afford to be strategic. Let me show you why this matters. Picture this. You're offered a chance to join a startup. It's risky, but promising. Without savings, you'd decline, clinging to the stability of your current job. But with $10,000, you can afford to gamble. You have runway. The startup might not pay much initially, but if it succeeds, your equity stake could be worth millions. This is the power of leverage. It's not just about affording to lose money. It's about affording to take risks that could transform your financial future. And this is where it gets dangerous, but in a good way. You can now make moves that others can't even consider. Here's what's actually happening. The real value of saving $10,000 is that it buys you time. Most people don't realize the impact of this. Time to learn new skills, time to pivot careers, time to invest in yourself. It's not just about having a buffer for emergencies. It's about creating a platform for growth. You're not just securing your present, you're investing in your future. This isn't just theory. Studies show that people with even modest savings are more willing to take entrepreneurial risks. And that's what accelerates wealth building. And the key understanding you need: the $10,000 milestone is a catalyst, not a conclusion. It empowers you to design a lifestyle that aligns with your goals. It's a financial launchpad. Yes, it's money in the bank. But more importantly, it's freedom in your life. And that's why when you hit that mark, everything changes. You're no longer just getting by, you're getting ahead. Stay strategic, stay bold. That's how you truly capitalize on your financial achievements. Here's something most experts won't mention. Accumulating $10,000 in savings is just the beginning. The brutal truth is, it's not about what you should do next. It's about what you shouldn't. Most people believe they need to find the next big investment or hack to grow their wealth. They're wrong. This is where it gets dangerous. The real secret is in resisting the urge to overcomplicate your financial strategy. Think about it this way. The power lies not in being clever, but in staying boring. Let me show you why this matters. Imagine you've saved that magical $10,000. You're excited, and rightfully so. But suddenly you're bombarded with advice. Buy this stock. Invest in that crypto. The noise is deafening. And here's what's actually happening. People start playing the market without the necessary skills or patience. They chase returns and end up making impulsive decisions. The illusion of being an overnight success is tantalizing, but it's just that, an illusion. I call this the cleverness trap. It's the belief that your newfound savings mean you now have to become some kind of financial wizard. You don't. The brutal truth is, the most successful investors aren't those who make flashy moves. They're the ones who consistently follow simple, time-tested principles. Consider this. Warren Buffett, one of the most successful investors in history, attributes much of his success to discipline and patience. Not because he jumped on the latest trend, not because he made risky bets, but because he understood the value of staying boring. Picture this scenario. Instead of seeking the next big thing, you decide to put your $10,000 into a low-cost index fund with an average annual return of 7%. Over 20 years, with regular contributions, that initial amount could grow to over $40,000. That's more than 4 times your initial investment, all from staying consistent, all from staying disciplined. Most people don't realize the power of this approach. They think they need to be constantly active to see results. They couldn't be more wrong. This is the exact moment where discipline is tested. It's easy to be disciplined when you're starting from zero. Every dollar saved feels significant, but once you've reached a milestone, the temptation to do more is overwhelming. The key understanding you need is this: consistency trumps complexity. Stay boring, stay disciplined. That's what builds wealth. And that's what financial advisors won't tell you. They're eager to sell you strategies, but the real secret lies in the commitment to simplicity. And that's why most people never break free. They get caught in the cleverness trap, chasing complexity when the true power lies in simplicity. So stay boring, stay disciplined. That's the unspoken rule to financial success. So there you have it. Saving $10,000 isn't just a financial milestone. It's a psychological turning point. It's not simply about having 10 grand in the bank. It's about the shift in mindset that this achievement triggers. Most people think the hardest part is reaching that first 5-digit sum. They're wrong. The hardest part is what comes next. What you do or don't do afterward is what determines your financial future. Here's the thing nobody talks about. When you hit that $10,000 mark, the game changes. Suddenly, you feel empowered. You might even feel invincible. But this is where it gets dangerous. I call it the illusion of arrival. It's the false sense of security that comes with hitting a milestone. You think you've made it, but the brutal truth is you're just getting started. $10,000 might seem like a lot, but in the grand scheme of wealth building, it's merely a foundation, not a fortress. Think about it this way. You're not rich. You're not even close. You're in a precarious position. You can afford to lose some money, but you can't afford to be reckless. And that's the trap people fall into. They start taking risks they shouldn't take. They start thinking short-term gains are pathways to long-term wealth. They start gambling instead of investing. And that's how dreams crumble. Let me show you why this matters. Imagine you take that $10,000 and invest it with a risky strategy. You might think you're being clever, but you're really just playing with fire. A 20% loss wipes out $2,000. Gone. Just like that. That's more than what most people save in a year. Feel the weight of that. Now multiply it by the number of years you've been saving. 5 years of saving, 5 years of discipline, 5 years of progress, all at risk. Here's what's actually happening. You're mistaking action for progress. And the real lesson is this. The $10,000 rule isn't about what you should do. It's about what you shouldn't. It's a reminder to stay boring, to stay disciplined, to resist the lure of complexity. Remember, consistency trumps complexity, always. The simplicity of staying committed to your plan is what builds wealth. The hardest part wasn't getting here. The hardest part is not destroying it. So keep it simple. Keep your eyes on the prize. Avoid the cleverness trap. Avoid the illusion of arrival. And above all, stay boring. Stay disciplined. That's the secret sauce to financial success. The kind of success that sticks. The kind of success most people never achieve. The kind that keeps growing long after you've forgotten the struggle it took to save that first $10,000. And that's why most people never break free, but you will if you stay the course.